Hey everyone, it is 30th of November, Wednesday. Just going to do a quick run through of some ideas before Powell speaks today. And we've also got the non-farm payroll number on Friday. So markets have been pretty slow leading up to that for obvious reasons. Two big events. Okay, here we go. So this is the dollar index. The dollar index is, although you may have forgotten, in a longer term bull trend. There we go. There's the daily chart. Now, for me, this is still just a correction in the bull trend. I know lots of people think the dollar has reversed. I know that lots of people think inflation has reversed. And everyone thinks that we've got a golden, rosy scenario where inflation is going to collapse, interest rates are going to go back to zero, blah, blah, blah. I don't believe a word of it. I think that this is potentially, well, we do have a potential double bottom in the dollar index. The first low with a nice long lower wick, not a green body, which would have been better, but still we got a decent bounce off there. The next candle, which we had a couple of days ago, has got a less long wick, but still a long lower wick with a nice green body candle. A little bit of follow through yesterday. So there is a good chance that we've got a double bottom in the dollar index at the 200-day moving average, and the bull trend can resume. First stop looks likely to be around the 109, 109.90, 110. Hang on a sec. Okay, that's around the 109.00 area, 108.90, 109.10. Looks like the first target anyway. So that's a good 250 pips rally if I'm right about the double bottom. And of course, the euro being the biggest weighted currency in that dollar index, we have something similar on the daily chart. Again, looks like a bounce in a bear trend. Hit the 200-day moving average, not as clean as on the dollar index, but we do have a nice shooting star candle there on the euro versus the US dollar, and then another one a couple of days ago where we retested that high for November and reversed. So a small green body on the first one, a bigger red body on the second one. It's probably a little bit more negative. As you can see, we're now holding below the 200-day moving average. My resistance level up there at 103.70, 103.90 yesterday worked. So if you're in a short position, we've got a little bit of profit on that so far. So I am looking for further dollar strength. Now, you'll know that I've been very, very vocal about my theory that the stock markets have peaked, the US stock market. So I talked about this being a potential double top at the 200-day moving average. And that does seem to have played out. So if you were running a short position, or if you managed to jump into a short position on Monday, that's looking quite good, or Sunday night on the open. We even had a breakaway gap on that Sunday open, whereby the market opened well below the previous, the Friday night close. So a little bit more weakness yesterday. You know where my support level is, around 39.25, 39.15. You can see that just from the daily chart. Anyway, there are more levels on the shorter term charts to back that up. So that's going to be key. Obviously, a break lower will be a significant sell signal, but that is all in the report anyway, so I don't need to repeat it now. NASDAQ also backing away from my 11,750, 11,850 resistance area. So that's all going according to plan for the NASDAQ. Bounce in a bear trend. Less of a bounce, of course, in the NASDAQ. It's been the weaker of the three US stock markets that I cover for quite a while. The DAX, as you know, had a real big resistance level up around 11,500, 11,600, and we certainly have reversed from exactly that area. We had fib levels, previous peaks, and 500-day moving average, so it was all fairly obvious as a strong resistance level. We haven't fallen away that far yet, but I think we're on the way. And when I look at the hourly chart, I could even maybe argue that we've got something of a head and shoulders pattern there, have we? Yeah, I could argue that. Anyway, we'll see. So I'm really looking for, I'm going to just talk about Powell. He's been absolutely clear and very consistent in his message that interest rates are going up. They're going up to, well, they've given us a level of around 5% or whatever it is, and they're going to stay up there probably throughout the whole of 2023. For some reason, stock markets just don't believe it. They seem to think that Powell is lying, or he's going to be forced to pivot. I just don't get it. I think he's going to reinforce that message today. I don't see how he can say anything else. I don't see how he can say, oh, well, actually, what I said a month ago, I've changed my view now, and we're going to pivot on rates, or they're not going to go up as far, or they're going to get cut next year. I just don't see how he can do that. He'll lose all credibility, and the Fed has a credibility problem already with the fact that they're way behind the inflation curve as it is. I think they've got to be seen to be tough on inflation. Gold. Now, this is the only concern for me, because gold, as you know, been bearish on gold. I started out at the beginning of the year saying that inflation is going to explode, interest rates are going to have to follow, and therefore gold is going to go down. Gold is not an inflation hedge, and I've been proved right throughout that year, of course. We've now had a good bounce back after the triple bottom. This was my buy signal. We've had a good run up. Now, we dipped back to my buy level at around 17.25. That's all worked well. We're going sideways now in a consolidation. I still think gold will go higher for all the reasons that I've already explained. I'm slightly confused with this sideways action, and I am concerned with the fact that I think the dollar is going to go up. I think the stock markets are going to go down. I think Powell is going to be very hawkish. The chart is telling me that gold is going to go up, but fundamentals are kind of indicating to me that that might be wrong. So I'm slightly confused. I am long gold. I've got to go with what I see on the chart. Yeah, I'm prepared to be wrong on that if Powell does come in with hawkish messages in his speech today. I don't talk about the VIX much, but and as you can see, mostly sideways, volatile. We're edging towards the trend line support down here at around 20, just under 21.5 for the VIX. So maybe there's a reason that will start to trend higher. Maybe I'll be right about the stock market starting to trend lower, which of course would send the VIX higher, or should do in theory. Okay, that's it. Just a quick note. I hope that's helpful. We'll review this situation maybe before the non-farm payroll number on Friday.